I'm excited for my QBR, but I get to do all the talking because I got 8 million questions. I know Joe can't believe that, but
All right, good afternoon. Thank you all for joining us. Today we're going to be discussing the exciting world of insurance.
whoop-woo!
With information security, you know, there's 4 decisions that you can make about risk. You can mitigate the risk, you can avoid the risk, you can transfer the risk, or you can accept the risk. And cyber liability insurance falls under the idea of transferring the risk. So you're transferring a portion of the risk to an insurance carrier. I remember when the topic of cyber liability insurance first came out, it was pretty confusing. Nothing was really standardized. And now, many years later, it's matured a little bit, but it's still a challenge to really wrap your mind around, especially for small businesses. So if you've started researching this or you're about to start, then I think you'll find some valuable tips today. And if you've missed any of our past webinars, you can always go check them out, as well as this one on demand at our Top Dog PC YouTube channel. And as always, I'm going to do my best today to sort through your questions and get them answered. So don't hold back. I expect that there could be quite a few questions on this topic. So put them in the chat and I will bring them up. You know, if we can, we'll do it during the slide. Otherwise, should have a good chunk of time at the end to deal with questions. So, all right, you guys are in for a treat today because you don't have to just listen to Joe and my beautiful voice. Today we brought in a guest speaker, an insurance expert, if you will.
Right.
And and real quick for those who are new, my name is Jordan Darling, and I'm your color commentator and facilitator. I am a certified information system security professional, a vice president of Top Dog PC, and CEO of High Tech Secure. I'm here with Joe Malmberg, who is also riding in the passenger seat today.
Yeah.
Joe is yeah. You get to just take it in and ask or answer some questions and just banter with us. But Joe's the owner and president of Top Dog PC, CTO of High Tech Secure, and holder of SANS GIAC Security Essentials certification and many other certifications. He's tried and true. Joe and I actually both have 16 years of experience as small business owners in information technology and information security. So I hope that experience can bring you valuable insights here. But enough about us. Our presenter today is the co-owner of Girtz Financial Services. It's owned by him and his wife, Jackie. He's been an insurance agent and business owner for 20 plus years. He is our insurance agent, a guy I trust, and the first person I even talked to about cyber liability insurance many years ago. And someone said to me this week that the 3 magic variables to strong customer relationships are: if I trust you, you are credible, and you're not a jerk. That certainly defines John, in my humble opinion. So, John, take it away for us here.
All right. Thank you, Jordan Darling. Awesome. I've already written down notes just on your introduction, so we are already definitely moving forward. So, as Jordan said, my name is John Girtz. I am co-owner of Girtz Insurance and Financial Services. So, insurance is our #1 bread and butter. I'm also a financial advisor, but insurance, so small business is a big part of our business, so are home and auto insurance. So when you talk about small business, you talk about businesses like Top Dog or retail stores, mom and pop shops, 50 employees or less. That's your general liability, your workers' compensation, product, and also cyber is a big part of that now. So cyber liability is what we're going to talk about today. And Osseo is the home of Girtz Insurance, where my wife Jackie and I run our business out of. Okay, so just a little bit about me. This is probably my most coolest picture I have in my life. So for people that don't know me, which are most of you, this is the first picture that my family was all in the picture together. So it's a big deal, and that's a long story that I can't get into right now. But if you ever get to know me, then I can explain this picture better. This is our family years later, and this is just to prove that you don't have to do everything right in life to have blessings and good fortune. So family's important, and insurance is a part of, you know, doing things right. I think we all have insurance. It's just asking the right questions. So today's topic, cyber liability, data privacy, data security, that's what we're going to go through today. My goal or the agenda here is to talk about this product because I would imagine most of you have insurance for your general liability, maybe your work comp, those types of things. And you might even have a security policy or cyber policy, but you really don't know what's in it or even how to have that conversation. So this might give you some information to ask your current agent and just to have that conversation and make sure that you're covered correctly, or at least have your concerns addressed so that if there was a breach or a loss, the insurance is going to act in the way that you think it will. So how do you have that conversation? How to structure your coverage. We'll do a couple claims at the end and then open it up for questions and answers, and hopefully I can have this done in a half an hour, okay? So cyber liability, there's many different names for it. There's several different categories of it. Some of these mean the same thing. Some of them mean totally different things, but when you talk about cyber liability, that's usually a very broad terminology, but inside of that you can have your privacy injury liability, network security liability, data privacy, theft of digital identification, cyber extortion, internet liability. All these terms can mean different things to different people. So you just want to kind of have an idea of what you're talking about when you talk about these different things and have an idea what these terms might mean. This slide is not to give you anything specific. It's just to show you that in the world of attacks, vectors, and cybersecurity, that many things are measured. This is a funny slide because it says that 32% of these attacks are unknown. They don't know where they come from or how they get there. But forensic helps find that out. Matter of fact, that's going down because we're just getting better at figuring this stuff out. But there's I think 11 different categories here of different type of cyber attacks, and you just want to make sure that your cyber liability can address these or the ones that you think are going to be the most concerning to you. Okay, so take all that and shrink it into little different categories or bigger categories. The number one coverage in your cyber policy is this thing called third-party coverage. So third-party coverage has to do with the damage you're doing to, let's say, your clients. So your client's information is hurting them, and what is your responsibility to that? So that's third-party coverage. It's the data breach part of your coverage. It's the privacy liability part of your coverage. It's a part of the coverage that protects how you have to deal with your clients, okay? First-party coverage is another part of your cyber liability, and that has to do with the loss of your business. So the ransom you have to pay, the forensics guy you have to pay, the attorneys you have to pay. So first-party coverage and third-party coverage are the two big terms that are talked about in your cyber liability. You want to know about supplemental payments. These are payments for different things that might not be covered in the first or third-party coverage. There are also, you might have different policies like crime policies that are in addition to your cyber policy to handle different things. And then your electronic media coverage, your data coverage, these are all different parts that could be addressed, okay? All right, so just concentrate a little bit on that third-party coverage. So third-party has to do with the transmission of malicious code to other networks. So like if your computer affects a whole bunch of other computers and you need coverage to help fix that, that would be a third-party claim. When you use your network and it harms other people, like the malicious transmission, that would be a third-party claim. Costs to reissue your credit cards and the debit cards for your clients that you hurt, that would be a third-party claim. So liability for access by a hacker, they're trying to get the identification of other people, the financial data of other people, medical records, all these types of hacks would be covered under a third-party claim, because this is the information that is hurting not your business, it's going to hurt other people, and you're going to be responsible. So examples of third-party claims. Okay? So first-party coverage, this is a coverage liability that arises from unauthorized access to the named insured system. So in the world of insurance, the named insured is you, the business owner, or the business. So first-party coverage. Unauthorized access, so access gained as a result of fraud or deception. So it could be that it is an unauthorized employee, an ex-employee, somebody that is deceived or tricked. So when you look at the possibilities, it's not just that you have credit cards, but you also could have employees that do something wrong or don't do something right that hurts your business. So destructive code in a computer can do damage. That is a cyber liability claim. Extortion, loss of data, even if it is for profit or not for profit, meaning that claims can arise from all different situations. So these are examples of how first-party coverage would handle, or what they would handle, what first-party coverage would handle. All right, data privacy first-party coverage applies to potential unauthorized access to confidential information. First-party coverage, loss or improper disposal of paper records. Matter of fact, one of the examples I'm going to show has it wasn't even electronic. It was a file cabinet that had data in it that was a cyber claim. So coverage dedicated to regulatory fines or penalties. There's a lot of rules and regs within the how you have to handle your data. So you could be fined by the government, and that's a first-party claim. So when you have to pay a fine. Coverage for cyber extortion. Some criminals will take your information or your client's information and say, pay me X amount and we'll get you back up and running. So that's a coverage, first-party coverage. All right, so there's a little bit of difference in this terminology between the damages that are done and a claim. Sometimes people interchange these, but when you get a situation that happens, you're probably going to, after you call your tech support, after I call Top Dog and say help, then I would be calling my insurance company, maybe with a question. Some insurance companies have like a hotline for a help hotline, okay? And these are great services that insurance companies provide. What do I do? I don't really want to put in a claim yet, so what do I do? Well, you can call a service hotline and they can give you some advice. A lot of times that advice is, hey, get the claim started so that we can start helping you. So you put in a claim, and that claim is written demand for coverages, for damages or a suit, but really you don't even know what the damages are yet, okay? Damages are going to be what has to be paid out to fix or repair. So damages is your cost. A claim would be figuring out what the damages are. All right, this is
John,
a little.
hey, John.
Yeah.
So when you start the claim process and you don't know just yet what the damages are and the costs are, is there any kind of expiration where you come to find out what additional damages were, and then it won't cover it because the claim resolved already or something?
So I've never had that situation in cyber. That's much more common in like your house claim where you take forever to get your siding done or your roof done or a property coverage. But with cyber, you're not going to wait a year or two to report it, and then they're going to help you work through it. So I would tell you that I don't know of a situation where because the time ran out, so there's no coverage. Money can run out, you can hit your limits, and then there's no more money to satisfy a claim. So you want to know what your limits of coverage are, but a time expiration, they're going to help you work through that, and you're going to put in a claim way before that expiration happens. I would tell you that after you think there's something going on and you can feel that there's something wrong, and you've checked with your your computer people, you want to get the insurance company involved sooner than later. I'd tell you that's probably a good step. Does that answer your question? Yes, no?
Yes.
All right. All right, so this next slide is just to, a lot of times we're talking to potential clients, and they say, well, I don't store information. I only take credit cards, okay, or something. That's a common answer. So are you at risk if all you do is process credit cards? And so this slide is just to show you a little bit of the difference between the owner, the data owner versus the data processor. And maybe this is not a great use of terms, but it is to try to say that you have a customer and you take their credit card and then you swipe it through your machine and the data processor processes it and does all that stuff. Okay? Now hypothetically that data processor gets hacked and all that information gets leaked out or something happens. Okay? So in a policy, in a cyber policy, that data processor is responsible to tell their client that this happened. So they need to notify you, the owner of the business, that this happened. That's their responsibility under PCI regulations, which we'll get into a little bit later on. And now your responsibility is for you to tell all of your clients, which could be thousands. It depends. And so you want to be aware of the responsibilities that you have by accepting credit cards or taking information, storing information. It's not just because somebody else got hacked, so it's their responsibility, because you're responsible to your clients and they're responsible to yours. So your exposure can be significant even if you don't think it's something that you should be responsible for. Okay?
Hey, and John, we got a quick question on that. What if I believe the incident was the fault of a third-party negligence? I think with that makes me think like if you mentioned if that data processor discovers an incident and then they have to report to you. What if you feel like you discovered an incident that you would blame your vendor, your third-party vendor for? What's maybe the steps there? I actually makes me think of a client that we have that went through something like that, where they discovered that because of an update to the software that they use, the update somehow exposed notes in the system that they had been putting confidential information in, and now for a period of time everyone in the company had access to those notes, and so they discovered that, not the third party. What are your thoughts on that?
So like most claims incidents, the answer depends on a lot of the details in that situation. So I'm going to assume a couple things. I'm going to assume that that person that noticed it had insurance, cyber insurance, and then what I would do there. So if you have insurance, then you have a huge advocate on your side to get it worked out. If it's not your fault, the insurance company is going to help you move through that. You might have some damages anyway, so you might have some exposure there, but there's this term called subrogation that the insurance company will go after their insurance company or after them to recover your funds because they're on your team, your insurance company. So, you know, I don't know, you got to make sure your contracts are good. You got to make sure that you're doing what your tech people tell you to do. And then if that's all done and they cause you a loss, you still have loss. Good luck trying to collect it from them. That's what your insurance is for. And then if there is reason that it is their fault, the insurance company would subrogate to try to recoup their losses. I had a situation, something like that too, with one of my bigger clients. One of his employees did upgrade stuff, left a security wall, a pass gate, something open, and it was discovered by the third party. And so there was a notification sent out that this exposure could have happened. It ended up not being very much, but it was, the employee's just trying to do the right thing and forgot to do one thing at the end, and it left a gate open that had potential for exposure. So, yeah, I would say if you don't think it's your fault, you're calling your insurance company and saying, hey, what do I do? And they'll help you through it. Doesn't mean it's your fault. It might not ever be a claim, okay?
Okay.
All right, so there's terms in the cyber world or the data world. PII is personal identification information. PHI is personal health information. PCI is personal credit card information, the credit card processor, personal card information. So I think for most of the people in this program, PII might be a biggest exposure, maybe PCI might be a big one. But if you're a healthcare provider, you have health insurance exposure too, and HIPAA rules and HIPAA laws. But personal identifiable information or personal identifier information is the stuff like your name and your address in combination with these other factors that when you put them together, they can cause a lot of damage. So obviously, everybody tries to protect their social security numbers. I know in my business, I collect social security numbers on almost everybody. And we store them, we keep them. We have to keep them in a special way that they're encrypted and all this kind of stuff. And our cyber policies require us to do it in a certain way so that it's very hard to link that social security card with any certain name. Birthdays, driver's license numbers. The insurance world collects all of these. Account information, including your credit card, medical records. Even though they're under this term called PII, medical records could be just identifiable information, but it's not your health records. Bank account records, other financial records, all this falls under your identifiable information. This is what hackers are trying to get at, okay? So you say, what is a hacker? A hacker is that guy that looks around the internet, looks for loopholes or vulnerabilities, and then comes in and attacks you, right? That's what everybody thinks a hacker is. Or
he's a guy with a hoodie and like the Matrix behind him.
Right on. That's the guy, and he's out there all over the place. And then we believe that there's none in this country. They're all maybe from other countries or something like that. But anyway, that is a perception, and that could be, right? But in reality, it could be somebody else. So this is just an example of maybe it wasn't that. Maybe it's a disgruntled or a careless employee that happens to do something wrong. For example, employees fired. The company did not shut down the employee's access before termination. Terminated employee puts out employees' and clients' information onto the internet. Is that a covered claim? And I'm going to tell you that that would be something that is covered under most third and first party cyber policies, even though it happened inside and it was deliberate. It wasn't something that you, the owner, deliberately did. It's stuff that happens. So as far as where does that loss fall on your policy, there could be first party loss coverage there. So it could be that caused interruption to your business. So what's the reasonable cost to restore the system and the data that got destroyed or hacked? Extra expenses to remain functional, to keep your business open, up and running. If you had to work on a different site, get other computers involved, do some kind of work like that, there might be extra expenses. Reasonable expenses to reduce future loss payments is a big factor that goes into how do you mitigate the loss now so you don't have to pay more later. So if there is extortion demands here, first party loss would cover that. The theft of money and security through unauthorized access, or they went in and stole money out of your account. Forensic costs to try to figure out how this happened and what happened. And then lost time and reputation damages all could be under your first party coverage, okay? Things that are not covered in a situation like that would be something like data that was entrusted to other third parties. So you had your data stored elsewhere and something got happened there, that would not be covered under first party. Infringement to your intellectual properties or your trade secrets is not covered under first party. So if you have things that are important to you like this, then you know that you need something more than just first party coverage, okay? Employee theft of money and securities, that is like if your employee steals, that's not a cyber peril. So peril meaning something that happened that made you lose money. That is under your crime policy. So if you don't have a crime policy, that would be where that would be covered. Cost to upgrade your system. So when your building that you own gets destroyed, they build you a new building. And sometimes there's upgrades needed to rebuild that building. But in cyber, when you've been hacked and you need to put in things that bring you up to an upgraded system, normally cyber does not want to pay for that. That's something that you should be doing as a business owner anyway. But there might be sometimes where you have to buy some new stuff, and that's going to happen here. But if you had to substantially upgrade because you're doing something wrong, the cyber insurance industry is going to want you to do that outside of the insurance coverage, okay? So EPLI's employee practices liability, that's a different coverage in how you treat your employees or what can happen there. Even though this could be something to do with cyber, EPLI, pollution coverage, discrimination, contractual agreements, all outside of your cyber policy. Cool, good, get that a little bit. So breach mitigation, this is something where how do you reduce the loss by doing, so you can do nothing and the loss is going to get worse. So what do you have to do to mitigate? Number one is you got to notify everybody that maybe could have been damaged by this, whether they did or not. And there's a big feeling out there that, you know, sometimes it's better if everybody in the world doesn't know. Yeah, I would agree, but the rules say that you got to notify. So you're under obligation to notify all your customers that their data could have been hacked, okay? You got to monitor their credit, so credit monitoring for your customers. Public relations expense, how damaged are you and how do you fix that? Is there ways to fix your relationship with the public? Reward coverage, so if they don't know who did it and we can figure it out and there's a reward, sometimes you can have coverage to put out rewards. And then business interruption, so most insurance policies have something in their policy for business interruption, but it says that we will cover your business interruption if you have coverage for that. So like your place burns down, you have business interruption coverage, but if you don't have cyber coverage, you don't have business interruption for cyber. So even if it disrupts your business, if you don't have cyber liability, your business interruption will not cover that. So here's an example of social engineering. Social engineering is being deceptive. It's putting things out there that look real and they're not. So this is just a case where 3 staff members of a Canadian university were tricked into transferring $11 million to a fraudulent account. The fraudsters, what they did is they were able to create a similar site that looked like a site that the university worked with. And then the fraudsters contacted the university by email and said, hey, send us payments on these things that you owe us. And by the way, our account information changed. And so what happened was 3 different people at that university transferred 3 different funds in the amount of $11 million. And it seems crazy, but this stuff can happen. I don't know if this was something where all 3 of them were independent, but sometimes checks and balance really help this type of thing, where somebody that's responsible for funds verification is different than somebody that writes checks. So insurance companies look for checks and balances all the time so that stuff like this can be avoided. I think we've all seen these types of...
John, that was covered. That was covered under their policy?
Yeah, that would be a covered peril. So I kind of talked about 2 different things there a little bit, but one thing is that insurance companies want to try to say, hey, what are your checks and balances for writing out checks? That's why, because they want to try to prevent this type of stuff. But if it does happen, that's a covered peril. Now, I'll tell you, Jordan, honestly, most of the policies, I have a few policies, but most of them are under $11 million of coverage. So you got to have $11 million of coverage to cover something like that, but you could. Girtz Insurance doesn't have $11 million to pay out to anybody, right? So I would never have that much coverage for myself. But if you're big enough and you're paying those kind of bills, yeah, you maybe want to have that. Cool?
Yeah.
All right, so I think we've all seen this type of an email that says, hey, are you available? I need to get some money from you and transfer it over. And if they can make this stuff look real enough, you trick people into it all the time. Not all the time. People are getting wiser about it. And I think we all know by now that this is not good email stuff, but they're continuing, the bad guys or, disgruntled employees all make this look a little bit better, okay? $4 billion globally loss in email deception type of stuff. That number is raising all the time, and insurance would cover stuff like this. Okay? So when you talk about website or electronic media coverage, you have your cyber coverage. A lot of cyber policies don't include website information. So your website simply would be that you have exposure that can hurt other people, libel, slander. I don't think that posting a Google review is part of that, but there are things that could be done where you are now in trouble because of something that you said or somebody said on your behalf. So you can get coverage for what your website does and doesn't do. The more coverage you have, the more information the insurance company is going to want to ask about what you do. So internet liability versus your cyber liability, these could feel like the same thing, but they're different. They're really different entities. So internet liability generally refers to risk having to do with your website, where cyber liability generally has to do with risks associated with your computer systems and your data privacy information. Okay?
I assume that follows like social media sites too?
Yeah, so I would tell you that if you own a social media site, your risk is different than if you own, Top Dog and people are doing reviews. So there's, and an insurance company is not going to take on a lot of risk of what other people say that can't be controlled. So there could be exposure based on your website. There could be exposure just based on your cyber liability. And these are just questions that you might want to ask your agent if you have questions about it, if there's exposures there. Copyright infringement. So if you have a website that has plagiarized information that ends up hurting whoever, there could be, I don't know, it can get crazy. It's just about asking the questions that concern you a little bit so that your agent and you can have that conversation. All right, extortion. This is kind of this is a big fun one. If you're famous, you can be extorted, or if you have a lot of information, you can be extorted. So extortion says, hey, I got your information and you need to pay me money, otherwise I'm going to leak it all out. Now, recently, there was an attorney, or is an attorney in New York that is an attorney for Madonna and other people that might have history. And this guy wants, or this thief wants $43 million to not leak that out. That's kind of a big one. That's a very big one. But even like if you're a clinic and your patient information gets leaked, that information is not worth a whole lot of money to anybody probably, but that clients don't want that out there. So the clinic could actually pay more than what that information is worth, because they're going to hurt themselves if they don't get this taken care of. So for the bad guy, making the clinic pay for the information is probably worth more than the information might be worth. Or if you're a casino owner or an energy company, which I don't think I have any energy companies in this call right now, but that information, that those mass records could be worth more to the company than they are to actually try to get that information. So extortion is a big threat in your policy, and you want to know what your extortion coverage is. Ransomware. So you get this little note that says, hey, your computer's locked up and give me a little bit of money and I'll get you back up and running. So, you know, statistics are all over the board on this, but every 40 seconds somebody gets hacked with this. So you get your computer, your denial of service for your computer, and you know, it could say give me $300 and I'll get you up and running, or it could say give me, you know, 300,000, I'll get you up and running. So they get in, lock up your computer. That's a cyber attack. That's a covered peril. All right, so we're kind of wrapping this thing up now. I hope I'm on track. But so when the insurance company looks at,
say John, sorry to interrupt.
Nope.
Because we talked about this a little bit earlier about ransomware, and I just thought that was kind of interesting. And so, like, you know, people have different approaches. You know, the FBI says not to pay the ransom. You know, and obviously, in a perfect world, people are doing their basic security, information security program. They're having some of the basics covered, and they have backups, so they don't even have to worry about it. But one of the topics that we were talking about was whether or not, like, when you have to involve your insurance company, will they typically, if you're someone who doesn't believe in paying terrorists for the ransomware payments, will the insurance carrier respect that, or will they go with the cheapest route?
So that's a great question, because a lot of times the client has a ton of emotion involved in, you know, these rotten people, where the insurance company would maybe agree with that, but they're going to try to take the emotion out of it and get it down to a financial, what's prudent here as far as financially responsible. So insurance companies are going to say, if we can take care of this for $5,000, we're not going to forego that and pay $20,000 to do it a different way. Now, if you wanted to handle it on your own, you probably could work that out with the insurance company, but they're not going to say, no, because you have ethics, we're going to spend, you know, 5 times as much to try to handle this claim. So FBI is probably not involved with many of these claims, and if they're small and you can get backup going and it's all it's not that big a deal, then don't pay. Let them keep your stuff and you rebuild your information with your backup. That might be a way to go. So the insurance company they'll listen to you a little bit, but are they going to take your advice? You know, it depends. They'll listen, Jordan, but they're not going to say, okay, we'll spend way more on this because you don't want to pay the bad guys. Sometimes you pay the $300 and you're up and running, and it might work. I don't know. I would defer that question back to my computer guys to say, hey, is this going to work if I pay this, or do we restore our information, you know? But I would tell you that insurance companies should get involved with this and help you try to work through that question. Okay?
Yeah. And you mentioned earlier that you might be able to work out a situation where they pay you the ransom amount, and then you can kind of pay the difference to potentially move forward.
You can, but in the real world, that hardly never happens, because when it comes down to your own money, you don't want to throw 10 more grand after something that's not worth it. You know, this goes away, you feel violated, but are you really willing to dig into your pocket, get your own attorneys, work through this yourself? I'll tell you that if you do get your own attorneys, they're probably going to want to get paid up front, because there's not going to be any money for them at the end when the client is still not satisfied with their results. So get you up and running, get you back in business. That's what these policies want to do.
Okay.
All right, so what's the insurance company going to ask for when you start getting your policy going, or when you ask for this? So they're going to want to know your basic security controls, what you already have in place or what you should get in place. What type of data do you process? What type of data do you store or transmit? Some of my clients store like bankruptcy information. That's a lot of information in those files. Some clients, they store like your water sprinkler system. So who cares if you get that data? So it depends on what kind of data you store. How well are your backups processed for your first-party recovery? That's kind of what we talked about with that ransomware. How quick can you get back up and running? Your content control of your website, who controls that? How does it work? Do clients have access to that? History of prior incidences is going to be a big deal. And also your gross revenues. All these will come into play when you get your quotes, and depending on how you answer these questions will cause more questions. Make sense?
Yeah. No, John, I got a question for you on that, or maybe just more of a statement. But
yeah.
When I know we've been asked by some of our partners, some of our clients, to help them out when they're filling that out, and I've read and heard anecdotal evidence or stories where a policy didn't pay out because somebody didn't fill that out truthfully, whether they did that on purpose or they just didn't know. I'm guessing that guidance is probably to, when you're filling out that application, to have somebody, like us, somebody that understands your IT, give it a once over, or go through the process with you, so you're being truthful.
So when insurance companies are going to want to know what they're taking on, they're setting aside $100, $200, $300, $1 million. So if something goes wrong, there's money there to cover this claim. So they're going to ask questions, right? And if the client doesn't know, then the answer that the insurance company is going to give you is no, thank you. You got to know. If you don't know, the answer is no. If you answer yes to something that is a no, the insurance company is going to look at that. If there is a claim and you answered it wrong, and the insurance company would have done something different based on a different answer, they're going to have some grounds to deny a claim. So if you're getting insurance, I would tell you that, answer the questions correctly, and you can totally have people look it over. But I would tell your client, have the agent look it over too. The agent is I'm on my client's team, and I know how underwriters work for the most part. And so you want to be truthful, but sometimes there's a way to tell the truth that helps versus other ways. And totally, am I going to have top dog involved with, hey, do I do this or do I not do this? Absolutely, because the more information that you give me, the more confident the underwriter has that I got my stuff together. They like that. They love that I work with you because you guys know your stuff. So yeah, it's good.
And it seems like more and more, as this has matured over the years, it seems like insurance carriers and underwriters are getting more third-party security experts involved to help figure out what questions to ask, and maybe even in some cases, hiring and staffing people so that they when they're asking these questions, they're asking the right questions to help them understand the risk involved.
Yeah, that's a great point, Jordan. This is a new coverage or a newer industry, cyber liability, and it's changing all the time. And so as the insurance companies get to analyze losses and what is working, what's not working, they are putting things in place. I'll tell you what makes a great insurance product is that it doesn't happen often, but when it does happen, it's financially destructive. That is a great insurance product. So many people can benefit from the coverage, but few people actually get hammered for it. So as we figure out how companies can better protect themselves, insurance companies will give credit for those types of things. So yeah, I would agree. I would think that most people know this next slide. You guys gave me a lot of this information, but best practices. Make sure your employees and you are aware of what's going on. Restrict data. I know that when you guys started working with me, I had a lot of my data opened up to more than I should have, and you helped me shut that down a little bit. So limiting collection of sensitive data. Even though we do collect a lot of sensitive data, we don't keep it or store it. Like payment information is destroyed after we have met the obligation to the insurance carriers, so we don't hold information like that. So sometimes you can collect and then destroy information so it can't leak out. Have a written response, have a plan in place. These are good things to have. Verify outside vendors, have strong controls. So this is kind of a tricky one, because when you're trying to get business and then you start asking your people that you're trying to work with for their verification, the truth here is that if they have good, strong controls, they're happy to share it with you. And if they don't, you might want to just at least consider the cost of doing business with them, okay? It's just a factor. It's not a way to make a decision. It's just like a data point as you're working out your deals, okay? Strive to be PCI and PII compliant. So when there's a whole lot of rules and regs out there. So just because you're not perfect doesn't mean you can't have coverage. Matter of fact, coverage is because you're not perfect, okay? So you don't have to be perfect to get coverage. And then have outside audit of your systems to make sure you're doing well, and that's something that we've talked about before too, Jordan. So that would be something that we tell you to do. The do's and don'ts, real quick. I don't want to take any more time here, but install and maintain your firewalls. Don't use vendor supply systems. Jordan, you already talked about this one. Somebody did an upgrade, and maybe the default passwords were put back in place, or somehow the passwords weren't covered up. So make sure you get your passwords updated. Protect stored records. You encrypt your records when you're sending them through your email. Make sure your antivirus software is up to date. Maintain your systems. You know, all these things are a lot of common sense, but I would tell you that I think your clients are already doing these things. You have any questions on that slide, or can I move forward?
Yeah, you can move forward.
You're good?
Mm-hmm.
All right. So PCI compliant just has to do with your how you're taking credit cards. And again, this slide is just to say you don't have to be perfect to get cyber liability. I would tell you that this industry is always changing. So when you're taking card information, you want to make sure that you're doing the right thing. Firewalls, antivirus are big, but are you following every dot, every T on your contracts? Maybe, maybe not. You're just trying to. So it's important to be striving to be great, but insurance helps you cover the holes, okay? Value of insurance, I'll tell you that if you do have a situation where customers are notifying customers can cost $1 to $2 per client. You got your $200 to $300 per hour forensic research. You got your attorneys that cost $400 to $500, $600 an hour, depending on the situation, to help everybody get their cards reissued, 20 to 30 bucks a card. And then monitoring their calls can be substantial. Monitoring their hotline calls can be substantial in a cost. So these are all things that insurance would pay for. Things that are harder to calculate could be, what is your feeling about public relations if something happened? You're constantly teaching your staff about technology upgrades. So teaching your staff is something that insurance could help you pay for if you have to do something different. Extortion demands. If somebody asks me for my records, it's going to be different than if somebody asked me to get their computer going. If I had an extortion claim versus somebody else. So these are all things that you got to talk to your agent about. What coverages do you need? Depend on your business. Okay. The rest of this, Jordan, is 2 examples that we can get into, and I would gladly do this, but I think I've miscalculated my time a little bit, maybe because of our discussion, and we can go into these 2 claim examples, but really I just want to say thank you both for the opportunity to present. I really do appreciate it. My name is John. I'm available if anybody has questions, but that would be my program, Jordan, unless you got some other things that you want to.
Well, we do have some
over.
questions. We do have some questions
right.
here. So in the time we have left, we can tackle them.
And I have a couple things too. So whenever you want to go first.
I mean, you can.
Okay.
You can go first.
I think some of them are just more comments too. But first of all, I was interested to see that you brought up the PR thing. So there is something there that can potentially help recover your reputation, which is, like you said, that's a big question mark. One of the couple questions I have, I'm assuming the answer to this is yes. If you're somebody who's a poor driver, your rates are going to go up. If you've already filed a claim, for maybe whatever it is, you've lost data or you've had some sort of infection on your network. I'm guessing rates go up like they would for a bad driver.
So I'll tell you that claims affect rates, right? This is definitely a factor, but sometimes, especially with this stuff, it's not, you did nothing wrong. It could be that it wasn't really your fault. Are you a target for some reason? So yeah, claims matter, and but sometimes it's a claims question. Sometimes you think something's going wrong, and so just because you called your insurance company doesn't mean that your rates are going up. I have several instances where there are claims or potential claims, and rates don't change because people are asking about how to do the right thing. But if you are not fixing your problems, your rates are either going to go up substantially or, more common, you're denied coverage until you get those things fixed. So are you doing something wrong? Was it preventable? All these factors matter. But yeah, claims do matter. But in this world, it could be that it really is not something that you can fix. So are you a target? Then your rates are going to be higher because you're a target.
Yeah, and John, we kind of talked about this earlier, where if you kind of compare this type of coverage with life insurance, what affects your life insurance premium? Well, it's when they take a look at your lifestyle, your health, and they start to calculate the risk there that impacts your premium. And if you consider this, cyber liability, what's your cyber liability? If you compare it kind of to how life insurance is approached, they're going to go in there to determine your premium by determining how healthy your security is, right?
Yeah, that's a great comment. So life insurance is a very mature insurance product, been around for a long time, and these companies know what to look for to best predict that. So do you jump out of airplanes is they try to figure that out on life insurance policies. Are you doing something? Are you going to travel to a different company in the next 2 years? They try to ask those questions in a life insurance policy to try to predict your exposure. So they're trying to do that with cyber now too. What are you doing or not doing that makes you a higher exposure or not? And a lot of these things, when you start looking into a cyber policy, you'll be told or helped on how to, mitigate your problems. We've had situations, I know personally, and Jordan, you mentioned this, I think, too, before that, if you're writing out checks and not having anybody verify where these funds are going to, that insurance companies sometimes have an issue with that, because the potential for you to send money to somewhere that you shouldn't is greater than if you have some type of check and balance in place where you can have somebody verify funds on a second degree somehow. So
yeah, what if you're a one-man shop or a husband and wife, owns a business and you're small? That's where that came into play for us. Is this person had to, apply for insurance and they had to answer no to that. And he's like, well, it's just me and my wife. I mean, I write the checks and that's just how it is,
So there's a couple things there real quick, Jordan, that number one is that some companies are trying to figure this thing out too. So if you have a one-size-fits-all cyber policy and that company happens to say, look, you have to have 2 people, then I would probably go yes, and I'd probably have my wife look at my checks before I send them off. Maybe that's an answer. Maybe that's not an answer. But there's other products out there that are not going to decline you because you're a one-man show and you are the only one that's involved with writing out checks. Okay? So there's other options there if you get declined. But if it's just an add-on to a current general liability policy and it's a very small product and they're going, hey, you got to answer these 4 questions, yes, and then we can add this on for nothing. And if you can't, you can't. You don't get the coverage. So it matters.
So we do have a couple questions here. I want to make sure we get to them, and this might take us a little over our time, but I feel like they're worth at least a short discussion here. One is just how do you best estimate the amount of coverage you should apply for? So when you're applying for it, you kind of select how much you want covered. What's a good way to estimate that?
That's a super great question, and I'll give you my, canned answer of this is really what I believe. So insurance is the moat around your castle, right? So the bigger your castle, the bigger your moat needs to be, okay? And so what are the options here? The options are, like what you open this up, Jordan, you can either self-insure or you can transfer that or try to mitigate it. So insurance says, hey, how much do I want? So give me a couple different numbers. Let's get some rates on that. But it's a discussion between you and your agent about what your business is worth. Worst case scenario, you can't pay it and you got to shut down. What does it cost to shut down your business? How much is your business worth? What does it cost to restart it? So maybe that's your answer. And maybe not. It goes into how much life insurance do you need. Now, if you're a great life insurance salesperson, you need about $100 billion to protect you and your family, right? So, but what's the reality of that? How much, it comes down to what can I afford and how much do I need to sleep well at night? So it's a hard question to answer, but it's a discussion is what it is.
Yeah, and I'd also probably add that it depends on how mature your information security program is, right? Because sometimes when you look at those applications, they have the questionnaire. Sometimes if you want to apply for $1 million policy, you have additional questions you need to answer. And they're a little more complex. They're a little more like mature security stuff. So if you don't have that in place, then you might have to stick to the lower policy.
I would agree.
Yeah. Another one here is again about the questionnaire. For the questionnaire, when you're applying for this, the questions are yes or no. What if it's not black and white? Can you talk through it with your carrier?
So those questions are on that sheet to try to figure out what the underwriter needs to know next. So these questionnaires are a one questionnaire fits all. So if you can't answer yes or no to it, then you can write a maybe on there. And if the underwriter has questions, they're going to reach out to you. So for sure, those are discussions to try to figure out what the insurance company is taking on. So yeah, it's all worth a discussion. And if you answer yes or no to it, and there might be more discussion or more information needed. So if, for instance, if you say, do you have a practice in place or written, and you put yes for that, they might say send it over. If you say no, they're not going to ask you for it. Okay?
Okay. Here's another good one. Can a policy be customized for my specific needs and desires?
Every one of these policies should be customized for your specific needs and desires to the extent of, what's available. So for sure. So I have some clients that have, tens of millions of dollars of coverage for this stuff, and they pay a lot of money, and they're customized policies. And so it depends on what you're saying about customization. So what's your deductible? What's your liability limits? What kind of coverages that you have? Sometimes coverages for the companies are standard, but there's a lot of different options out there if you want to shop around. So I'd say you definitely want to know what your needs are and make sure your policy fits that. Yes.
All right, good. I got two more questions here. One is kind of an interesting one, but I'll do this a little simpler one first. It's what is the typical premium, and how do you know if you've gotten a better premium or you could have gotten a better premium by mitigating a few risks first? So I think that's kind of around, how do you know you're getting the best price? And what is a typical price?
And are there things you can do to make sure that you're ahead of time to get your house in order?
Yeah, because I mean, will the insurance carrier, as you're applying for this, will they say, hey, here's your quote, but hey, you'll save $100 if you do this, this, and this,
So I would tell you, the more experienced your agent is, that you might get some assistance from them. So having your house in order, if you say, nope, I don't have a firewall, you're going to be denied coverage, and then get your firewall put in, and then you'll get coverage, that type of thing. So some of this is, you just got to have your house in order. Your premiums are based on how many clients you have, what's your profit, what's your sales, how big you are. So usually exposure is dictated by this number that you don't really get to control. And then the bigger your policy is, the more controls they'll look for. But I would say there's not a whole lot in a policy to say, hey, if you do this, you can save 10%, or if you do this, you can save 20%. But if there are things in the policies, and as these policies mature, these things will come up. But I would say you apply for the coverage, see what's out there, know what your options are, and then have that conversation with your agent. And they might not have all the answers, but they can go back to their underwriters and say, hey, how do people get better rates? What do they need to do? And you can have those discussions. So it's a discussion. It's a good one to have.
All right, this is the last question, if no more come in. How do regulations and legislation tend to impact underwriting?
Great question from the political. So
yeah, you got things changing and like new fines, number, like all of a sudden.
Yeah.
So yeah.
So insurance tries to keep up on that. Insurance has a big, their nose is and their ear is on the ground to things that come up. Your policies normally have coverage that's, an insurance contract says that the insurance company gets to do the contract, and then they have to follow their contract, okay? So, like for instance, coronavirus, a lot of business owners had to be shut down, and that's not a covered peril for most cases. Now, will an insurance company come out with something now? Maybe, maybe not. But when the government changes their rules and makes fines bigger, I would say that the coverage is in your policy if you have high enough limits. But if you don't, then there wouldn't be. You get to set the limits of your policy. Are there exposures out there that are not covered? Probably, but these policies are more inclusive than not. So I would say that there's more coverages here than most people realize, not less. But things do change. And as they do, policies change. And that's one thing about insurance, like computers, you're never going to know it all because tomorrow there's going to be new stuff out there. So
here's another one here came in. So if you guys can stick with us, just one more question. This is interesting too. How long does it typically take to get a decision on your claim and actually receive the payout?
So these types of things can take a while, but if it's a ransomware, you need to get this paid to get your computer up. That happens very quickly because you need it. But some of these things, I mean, you're monitoring your client's credit for a year for sure from the date of the loss. So these things can go on for years until they're all settled. So very quick to very long.
Yeah, and I'll just add that. I'll add that I know that we helped somebody out who had been hit with ransomware, and you know, they had gotten their systems back in order, but they still had more to do, and they were very antsy to get us to wrap up the work so that they could submit their final. So that the insurance could submit the payment to them, because it was kind of like they weren't going to just pay, oh, I'll pay this bill, I'll pay this bill, I'll pay this bill. They wanted all the expenses, and then they said, okay, now we'll submit it. So there was a time period where, at least with that particular person, they had to foot the bill on their own until they were reimbursed by their insurance company.
So that's a great situation that says that the insurance company is not going to just have an open checkbook to keep taking care of stuff as it comes up. They're going to kind of want to know what's going on, help get this thing closed up, wrapped up, and finished up. So yeah, they're going to want to know the scope and what it's going to take to get this thing wrapped up. But even after that, if other things get found out, that doesn't mean that you can't get covered anymore. Something gets found out, you want to be talking to your adjuster to say, hey, this came up or that came up. If things come up that you can't see right away, it would be, in most cases, the insurance company is going to look at it and say, okay, how do we address this next situation? But they're not going to keep an open checkbook and just keep fixing stuff either.
Yeah, and I think it goes back to you know, if you want this to be expedited as fast as, you know, humanly possible, it goes back to making sure that you notify them sooner rather than later, right? So if one of your, you know, earlier things in your incident response plan is getting your insurance involved, then they can get in, sink their teeth in, and identify all these things. You'll probably get paid quicker.
I would agree that the claim will get handled more efficiently if you submit it earlier. Yeah, I would agree.
All right. Well, thanks for sticking with us, everyone. That was good. I got no more questions.
I have just one comment I want to make that, you know, I thought was really an observation I made, I think, while John was going through this, and that's, you know, I've always heard, you know, especially in our industry, that, you know, cyber liability insurance is not an information security strategy, but it's part of it. And one thing I think that's really interesting that came up here is that when just simply during the process of going through your application, you're going to almost be forced to develop a strategy, because you're going to identify a lot of weaknesses potentially. You're going to identify some shortfalls that you may have, identify some policies maybe you need to put in place. Because, you know, as John said, you may take that, you may need a claim and you make a claim. But, you know, if your house is in an order, you're probably going to have a tough time getting a second claim if something comes up again. So that's why it's part of the strategy. So yeah, thanks a lot, John. This has been really informative. I really appreciate you taking the time today to talk to everybody.
You guys, I want to say thank you, and especially, so I know that most of these people are your clients, but man, do I appreciate Top Dog and what you guys do for us and keep us up and running. And so thank you. I just want to say, seriously, you guys do a great job of keeping our systems running, and we do appreciate it.
You're welcome.
Thanks.
Thank you.
Thanks, John.
Yeah, thanks, John.
Have a good one. Take care, everyone.
See you later. Bye-bye.
See you next time.